What's going on, guys? Welcome back to another video. Today we're going to be going over what happened to the stock market today, Wednesday, March 17th, and why I think going forward we can see some pretty good green days in the market. So earlier today, before the Fed conference, which is where Jerome Powell speaks about the economy, we saw S&P 500 basically down a bit, and then the meeting happened. And during that meeting, there's some pretty positive news. It made a lot of investors optimistic, and basically, they're holding steady on interest rates. So they're predicting that interest rates are going to be staying pretty low for the next few years, up through 2023, as well as the 10-year Treasury bond falling. So this is pretty good news for the market. Everyone's expecting the economy to recover more quickly than they anticipated. This is making a lot of investors optimistic, and it is very good. It's a very good time to get into the market and start investing. Now, obviously, you don't want to put all your eggs in one basket, and obviously, you don't want to throw in all your money at once. You want to still diversify your portfolios. You still want to dollar cost average, which means you're buying the highs and the lows. You're not trying to time the market. And as you can see, over the past year, we are pretty positive on the S&P 500. There's still a lot of room to grow for these stocks. A lot of the tech companies are doing great, but we still can't predict where the market's heading. And you always want to buy consistently, and constantly. So this means, yes, sometimes you're going to be buying the highs, sometimes you're going to be buying the lows, but if you're buying the highs, say September 2nd, you don't really know where the market's going. It could fall 20 points as we see here, but overall, it is going to recover in the long run. Now is the best time to get invested in the market, and I recommend everyone to slowly invest. It's a great way to grow your money and create financial independence, create wealth. A lot of people that do not invest, they end up working their entire lives. So I highly recommend starting this early. Let the compound interest grow. Collect your quarterly, monthly dividends, whatever it may be. And basically, that's it. That's it for this video. I'm pretty optimistic myself about the market. I do think that the economy will recover quicker than people are anticipating. A lot of investors are optimistic as well. And we can check out what I'm holding. So basically, I have an almost $50,000 portfolio. I mostly trade options on here, mostly selling cash secured puts and buying long-term equities, which are called leaps. These are pretty advanced strategies, so if you don't know how these work, you can request in the comments, ask some questions. We also have a link in our Discord. You can contact me on there. But basically, I sell cash secured puts and buy leaps. These are probably the safest option strategies out there. I know a lot of people buy weekly options, and most of those expire worthless, so you're losing a ton of money. But on the other hand, when you're selling options, it's a little more safe. So I'm playing Apple, DoorDash, Palantir, AMD, and Palantir again. The first three are cash secured puts. So if Apple goes under $118 by March 26th, I will have to purchase 100 shares of Apple at $118 regardless of where that price is. But if Apple stays above 118, I basically make full profit. The contract expires worthless, and I get all my collateral back. Same deal with DoorDash. If DoorDash stays above $130, expires worthless, I collect my premium that I collected for opening the contract. If it goes under 130 by March 22nd, or March 26th rather, I will have to buy 100 shares at that price point. Palantir, same deal. If a $23 strike stays above, I make my full profit. If it goes under by expiration, I'll have to purchase 100 shares. I chose these strikes because I'm comfortable with owning shares at these strikes. And for doing so, I do get paid a premium for writing these contracts. Cash secured puts, it's a pretty safe option strategy, but it does require a lot of capital to get started. So it is not a strategy for everyone if you have a small account. AMD and Palantir, these are leaps, so they're calls that are a year or more out. I've been holding these for a while, and so far they are down a little, but I'm still going to be holding them because they're a long-term position, and I think in the long run, AMD and Palantir are going to go up. So that's it for this video. If you're new here, please leave a like, comment below if you enjoyed the video, if you have any suggestions, and if you haven't already, please consider subscribing. Thanks for watching.